Assalamualaikum and a very good day to Dr. Hasna and everyone. My name is Amirul Aiman bin Abdul Wahab, metric number 8280867. I will brief a little bit about the disclosure of Mfrs 108. I will start with United Plantation Berhad. For 2018, there is no subsequent event for this company. As 2019 comes in, the company started to change one of the standards, which is Mfrs 16 lease. Mfrs 16 replaces the guidance in Mfrs 117 leases. I see application for determining whether an arrangement contains a lease. I see interpretation 115 operating lease incentives, and I see interpretation 127 evaluating the substance of transaction involving the legal form of a lease. As a result, the leasehold land classified as property, plant and equipment, as well as land use rights, were reclassified to right of use asset on January 1st, 2019 for the company. The specific impact of modifications brought about the implementation of Mfrs 16. For year 2020, there is no subsequent event for this company. Next company is Berhad. For this company, there is no subsequent event for this company in year 2018, 2019 and 2020. The third company is Unimag Group Berhad. For year 2018, firstly, unquote equity instruments previously carried at cost less impairment loss that classified as available for sale financial assets are classified and measured as equity instruments designated at fair value through other comprehensive income beginning 1 January 2018. The company elected to classify irrevocably its unquote equity instruments under this category at the date of initial application, as it intends to hold these investments for foreseeable future. Secondly, the company adopted Mfrs 15 using the modified retrospective method of adoption with the date of initial application of 1st January 2018. Under this method, Mfrs 15 can be applied either to all contracts at the date of initial application or only to contracts that are not completed at this date. For year 2019, Mfrs 16, which upon the effective date will supersede Mfrs 117 lease, I see interpretation 4 determine whether an arrangement contains a lease. I see interpretation 115 operating lease incentive, and I see interpretation 127 evaluating the substance of transactions involving the legal form of a lease. As permitted by the transitional provision of Mfrs 16, the group has elected to adopt a simplified transition approach where cumulative effects of initial application are recognized on 1st January 2019 as an adjustment to the opening balance of retained earnings. For 2020, during the financial year, the company have adopted the following amendments to Mfrs issued by the Malaysia Accounting Standard Boards that are mandatory for current financial year, which are amendments to Mfrs 3, definition of business, amendments to Mfrs 9, Mfrs 139 and Mfrs 7, interest rate benchmark reform, and amendments to Mfrs 101 and Mfrs 108, definition of material. The adoption of the amendments to Mfrs did not have any significant impact on the financial statements of the company. Next company is Berhad. For this company, there is no subsequent event for this company in year 2018, 2019 and 2020. The last company is SP Setia Berhad. For 2018, Mfrs 16 will replace Mfrs 117 leases. I see interpretation for determining whether an arrangement contains a lease. I see interpretation 115 operating lease incentives, and I see interpretation 127 evaluating the substance of transactions involving the legal form of a lease. Mfrs 16 sets out the principles for the recognition, measurement, presentation and disclosure of leases. and requires lease to account for all leases under a single one balance sheet model, similar to the accounting for finance lease under Mfrs 117. For year 2019, the amendment to Mfrs 16, COVID-19 related rent concessions applies to annual reporting periods beginning on or after 1st June 2020. Earlier application is permitted. The company has elected for early application of this practical expedient for all the leases for the financial year ended 31st December 2020. The company has recognized the effect of the rent concession in profit or loss as a variable lease payment in relation to the change in lease payments that were not a lease modifications. This amendment had no material impact on the financial statements of the company. For year 2020, the standards and interpretations that are issued but not yet effective up to the date of issuance of the company's financial statement are disclosed below. The company intends to adopt these standards, if applicable, when they become effective. First effective for financial periods beginning on or after 1st January 2020, which are amendments to Mfrs 13, amendments to Mfrs 101, amendments to Mfrs 108, and Mfrs 7. Second, for effective for financial periods beginning on or after 1st January 2021, Mfrs 17, which is insurance contracts. And the last one, effective date yet to be determined, amendments to Mfrs 10 and Mfrs 1 to 8, which are sales or contribution of assets between an investor and its associate or joint venture. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabila binti Azmi with number matric 280757. Here I'm going to present about Mfrs 116 and Mfrs 136. Mfrs 116 Property, Plant and Equipment Standard shall be applied in accounting for property, plant and equipment except when another standard authorizes a different accounting treatment. After the initial recognition, PPE are measured using cost model or revaluation model as its accounting policy, and the policy should be applied to an entire class of PPE. Based on our studies, we realized that 3 of the companies applied cost model to calculate their PPE, which are United Plantation Berhad, Berhad and Tongguan Industry Berhad. While the others remaining companies, which are Unimag Group Berhad and SP Setia Berhad, use revaluation model to record their PPE. Next, Mfrs 136 Impairment of Asset. This standard requires the recoverable amount of an asset to be measured whenever there is an indication that the asset may be impaired. For United Plantation Berhad, during 2018, there was no impairment loss recognized, same as the reversal of impairment loss. For the next year, the company has recorded impairment losses with amount of 4,243,000 ringgit, with no reversal impairment losses has been recorded. For the year 2020, which is during pandemic COVID-19, the company has recorded impairment losses with the same amount during the previous year, and there is reversal of impairment loss has been recorded with the same amount with the impairment losses during 2020. For Berhad, the impairment losses for 3 consecutive years are recorded with the same amount, which is 167,973 ringgit. There are no significant changes between these 3 years since the amount is same. There is also no reversal of impairment losses has been recognized. Next, we move to Unimag Group Berhad, also has recorded the same amount for year 2018, 2019 and 2020 with amount of 64,722 ringgit. No reversal of impairment losses has been recorded during these 3 years. For Tongguan Industries Berhad, during 2018, the amount of impairment losses recorded was 3,789,000 ringgit, with no reversal of impairment losses. The impairment losses has roses to 4,110,000 ringgit during year 2019 and during pandemic year, which is 2020. Yet, there is no reversal of impairment losses has been recorded during these 2 years. And the last one is SP City Berhad. SP City Berhad has opposite trend with the Tongguan Industry Berhad, which is during 2018, 521,000 ringgit impairment losses has been recorded. But there are some significant changes to the impairment losses during 2019 and 2020. The impairment losses were decreasing to 239,000 ringgit during those 2 years. Yet, there is no reversal of impairment losses has been recognized during these 3 years. That's all from me. We move to the next presenter.
Hi, I'm Asmos Nabenti Arshad. Matrix number given is 280710. So I'm gonna continue with MFRS 110, which is disclosure of event after report period. Events after the reporting date are defined by MFRS 110 as those events, both favorable and unfavorable, that occur between the end of the reporting period and the day when the financial statements are authorized for issue. They are the events that provide additional evidence of conditions that exist at the end of reporting period, which is adjusting events, material events, and those that are indicative of conditions that arise after the end of the reporting period, which is non-adjusted events. Non-material but significant events. In this project, we know that there is non-adjusted event for two companies, which is United Plantation Berhad for year 2018 and Unimag Group Berhad for year 2018, 2019, and 2020. Then, for company United Plantation Berhad for year 2019 and 2020, there is no subsequent events. For company I Berhad, Tongguan Industry, and SP City Berhad, there are no subsequent events for 2018, 2019, and 2020. That's all from me. Thank you.
Assalamualaikum, hi and a very good day to everyone. My name is Nur Syamimi binti Razali. My matric number is 280425. Now I would like to explain a bit about key audit matters. To summarize key audit matters, it is using appropriate subheadings for each concern, describe the issues in the major audit matters section of the report. It includes a rationale why the auditor deemed the most important in the audit, as well as the impact on the audit. Then, it adds a clear statement that the auditor found there were no important audit matters to report. For a qualified and unfavorable opinion, the duty to determine and convey the relevant audit concern is banned, as is the disclaimer of opinion. As for the first company, that is United Plantation, the key audit matters disclosed are: first, revenue recognition. The auditors focus on this matter to determine the possibility of overstatement of revenue. Second, valuation of biological asset. The auditors focus in this matter because of significant judgment were involved in the assessment of all content of various stages of the unripe FFB, which may cause possible variations in the fair value less cost to sale of the biological asset. Third, acquisition of plantation business and assets. Significant management judgment and estimates involved in the PPA exercise, particularly on the identification and fair valuation of the tangible and intangible assets. Lastly, impairment review of intangible assets. The auditor focused on this matter because of significant effort and judgment with assumptions and basis used by the management in estimating the VIU of the CGU. As for Berhad, the key audit matters disclosed are: first, revenue recognition from property development activities. The auditors focus on this area as significant estimate and judgment are required in determining the extent of property development cost accrual to reflect work performed up to the reporting date, determining the estimated total property development cost, to completion and determining the common cost allocation to the project phases from the total budgeted common cost attributable to the respective property development project. Second, valuation of investment property. The auditors focus on this matter due to the difficulties in finding the fair value of investment assets, which required extensive estimates and judgments in selecting the right valuation procedures and evaluating the underlying assumptions to be used. Lastly, recoverability of completed inventories held for sale. The auditors focus on this area since calculating the underlying assumptions in obtaining the net realizable values of completed inventories requires considerable. As for Unimag Berhad, the group disclosed key audit matters. First, inventory valuation. The carrying value of inventory was determined by the group's evaluation of the lower of cost and the net realizable value, which required substantial judgment in estimating the net realizable value. Next, impairment of trade receivables. The group assessed the impairment of trade receivables, and the assessment of impairment involved significant estimation, uncertainty, subjective assumptions, and the application of significant charge. Berhad, they disclose only one key audit matter, that is valuation of inventories. The auditors focus on this matter as it required to design appropriate procedures to identify such inventories and use judgment to evaluate the assessment made by the manager. The company SP Setia Berhad has disclosed key audit matters. First, revenue cost of sale from property development activities recognized on the percentage of completion method. The auditors focus on this matter as this area involves significant management judgment and estimating the total property development cost that is used to determine the percentage of completion and gross profit margin of the property development activities undertaken by the group. Secondly, capitalization of borrowing costs. The auditors focus on this matter because it involves significant management judgment in determining whether the development activities meet the criteria of an active development. Third, net realizable value of completed properties. The auditors focus on this matter because it is based on assumptions that are impacted by the predicted future market and economic conditions, management's yearly evaluation of realizable value of completed properties. The fourth key audit matter is valuation investment property. The auditors focus on this matter because it involves significant judgment and estimates that are highly subjective. Fifth, acquisition of remaining 50% equity interest in Setia Federal Hills in Berhad. The auditors focus on this matter as due to magnitude of the gain and significant judgment and assumptions involved, particularly in relation to the valuation of the land owned by SFH. In addition, the group engaged an external valuer to determine the fair value of the land. Lastly, the key audit matter disclosed is impairment assessment of investment in subsidiary companies. The auditors focus on this matter as the amount involved are significant. The assessment process is complex and involves significant management judgment about future market and economic conditions, and changes in assumptions may lead to a significant change in recoverable amount of investment in subsidiary companies. That's all from me. Thank you.
Hi, I am Nushia Binti Muslim, mentor number 2101 as the last presenter. I will cover the last part of this presentation, which is financial ratio analysis. The first one is current ratio, which under the liquidity ratio. To get this ratio, we should divide the current asset of a company with their current abilities. This ratio measures the company's ability to pay short-term obligations or those due within 1 year. Based on the table above, the company that is the most best performance in meeting their short-term obligation is United Plantation Berhad. In respect of the performance before and after COVID-19, all of the company's current ratio is decreasing except for Unimag Group Berhad Company. Secondly, debt to equity ratio. The debt to equity ratio is a financial ratio indicating the relative proportion of shareholders' equity and debt used to finance the company's asset. Closely related to leveraging, the ratio is also known as risk, gearing, or leverage. More specifically, it reflects the ability of a shareholder equity to cover all outstanding debt in the event of a business downturn. A ratio greater than 1 implies that the majority of the assets are funded through debt. Meanwhile, a ratio less than 1 implies that the assets are financed mainly through equity. Based on the table above, we can see that Songguan Industries Berhad have the best debt to equity ratio throughout the 3 years compared to other companies, even during the pandemic COVID-19. Lastly, as we can see on the table, we can see that most companies experience a low profit margin, and it is probably because of the pandemic COVID-19. Profit margin is one of the commonly used profitability ratios to gauge the degree to which a company or a business activity makes money. It represents what percentage of sales has turned into profit. Simply put, the percentage figure indicates how many cents of profit the business has generated for each RM of their revenue. United Plantation Berhad improved their profit margin ratio in year 2020, while the other company is decreasing. Meanwhile, SP Setia Berhad have the least best performance. So that's all from us. Thank you.